Sam and I will be co-presenting this. It's going to be roughly 1 hour. Or we're going to hang out afterwards. At least I can for a little bit after to answer more questions. And when we're done, we're done. Not everybody has to stay beyond that, but the recording and Q&A will be shared with everybody. The two primary purposes and topics or groups of topics today will be business taxes and personal finance. I'll share a rough outline with you guys so you know what we have in mind. And then we can get started. But I do have a legal disclaimer to give you that we are not tax advisors. We're not CPAs. We're not financial advisors. We don't have any certifications in these areas. We're simply sharing our life experience. And of course, we strongly encourage you to seek professional help beyond us. So under business taxes, some of the main topic heads are going to be business tax compliance, deductions and credits, and tax planning. Under the personal finance section, budgeting and cash flow management, debt management, retirement and savings. So those are the three sections under each of the two topics we're going to cover. And then, of course, we'll end with Q&A. Shall we get started? Do we have any questions before we start?
No, sir.
Super. Okay, so let's talk about taxes, our favorite topic. So now you guys are way more into this than you probably have ever been. Before, you might have just filed one tax return for your household, maybe two tax returns, right, if you file separately. Now you're going to have to file for your business and your personal. Now, here's a beautiful thing. If you own the business outright by yourself and you're a single member LLC, does that apply to anybody? Is anyone the only person on their LLC? Yes, Mr. McGee, but you have a partner, sir. Mr. Barnes, I see, is raising his hand. So Mr. Barnes, you're the only person on your LLC and you own your school outright, correct?
Yes.
Perfect. So what that actually means is Mr. Barnes's tax returns are going to be the simplest out of anybody, because the IRS will see that Mr. Barnes as an individual and his franchise are the same entity. He does not have to file two separate tax returns. His business can roll right into his personal, and he can file one tax return, claiming for the business as a disregarded entity and himself. For those of you who have partnerships don't have separate tax returns. Meaning that if you have a partnership, it actually flows up or out into an additional LLC or a personal, or an individual, if that makes sense. So Mr. McGee, Mr. Wano, Mr. Tager, you guys are all partnered with Mr. Wiegert, right? So your business LLC, when the taxes are done there, instead of filing with the IRS, they're going to flow into your holding LLC, right? So McGee Services or the LLCs that, Mr. Tager has set up or Mr. Wano has set up. And that's the flow that will go in. If you are directly buying your school, then the partnership LLC will flow into your personal tax return. If, for example, Mr. and Mrs. Dyson, they file jointly, I'm assuming, and they own the business jointly, that is a little bit, it's not as direct and straightforward. You can't just go, oh, we filed jointly and we're in a partnership jointly, so it's going to flow over. I don't believe it works that way. I still think you have to, it's a partnership, so you have to flow it into your personal, and then you can combine it on the personal side and file your taxes. So far, am I making sense? Have I lost anybody? Any questions there? No, perfect. Did I not cover someone's individual situation? Okay, great. So now that we talked about that, we talked about partnerships and disregarded entities. A disregarded entity is a single member LLC, like I talked about. So we're done with that. What are the different kinds of taxes there are that we have to pay as a business owner? That's an open-ended question. Let's have some group participation. Everybody except Sam can answer this question.
Get county taxes.
County taxes? Wow, that's not even on my list. That's crazy. Okay. I didn't even know the county charges taxes. That's great.
Well, personal property taxes. Well, I mean, like they ask for stuff from the schools.
Great. So county taxes. What else?
Sales tax.
Sales tax. Yes, sir. Income tax.
No.
Self-employment tax. State and federal taxes. So we just calculated 6. I guess county taxes, if we included that. I don't know if I already included it, but so there's a lot of different levels of taxes you got to pay. And of course, property tax doesn't come into this because property tax is related to if you own the property, right? So maybe for Fort Mills building, Mr. Uyghur will have to pay property taxes, but that doesn't come under any of you guys, right? So with this said, how does it work at each level? You sell a service or some equipment at your school, you pay sales tax on that. And then when you draw a salary from the business, you pay payroll taxes on that. Payroll taxes and then income tax on that. So payroll taxes from the business on the way out, and on the way in, you pay income tax on that. Now, after all of the expenses, including your salary, you get a profit. That profit then starts rolling over into your other LLCs or personal, etc., at which case you will pay your state and federal income tax. Depending on how North Carolina works, your state income tax might be charged at the business level as well. Sam, can you chime in at that?
Yeah, I think the high level view is like I don't work. Yeah, there's a lot of little things that you got to stay compliant with as far as that goes. And so I guess the biggest thing is just I don't think anybody in this room should be doing it all themselves, especially when it comes to like the employment taxes and stuff. That can get just really complicated. And if there's one tax that the government cares about the most, it is definitely employment taxes. And the reason is because you withhold that from your employees, even if you're the employee too, like you withhold that from your employee's paycheck. So basically you have the government's money. So if you don't give that to them quickly, they show up. I've known people who like, they will show up at your business and they have guns on their side. Like they're like, where's our money? So all that to be said is, all of that to be said is I think the overarching theme, and Ramo, if you had a very specific question, but I just wanted to chime in and say basically like everybody should be using an accountant at this stage at some level, and they're not expensive. You don't have to. And the guy that I use, I think some of you are even using Timothy, and they can do a really good job and do the payroll stuff and deduct all of those things and calculate all those things really easily. Because the truth is I don't do that myself, and I wouldn't even recommend you guys do that yourself necessarily. I would just have a call with Timothy and negotiate a best rate for him to do all of that. And he basically becomes a mini employee of yours that kind of handles payroll and makes sure you're compliant with all the taxes and things that have to be, the forms that have to be filed. Anyway, I wanted to say that, but then Ramu, what was your very specific question? Sorry.
Oh, I was going to say state income tax or state tax in North Carolina is charged at what level? The personal level? Does the business also have to pay state income tax or no?
No, for everybody here, it'll be at the personal level.
It's at the personal level.
Yeah.
Okay. And guys, I know we're breaking this down in minutia, so it might seem daunting or like, wow, that's a lot of taxes. The truth is you're already paying them. You're already paying these taxes. It's not really going to change. It's just now you have to be a little bit more aware of it, because you have to understand where your deductions can apply when we get to the deduction side, right? Your state will have different rules than federal, which will have different rules, from county. And that's why it's important to understand the breakup, so you know your unique situation of where and how you can deduct your taxes, because it's not one size fits all. So with that, somebody tell me what the deadline for taxes are every year.
April 15th-ish.
April 15th-ish, correct. It's usually off by 1 to 3 days from April 15th, because they try to keep it on a weekday, right? Sometimes I think it's like the closest Tuesday to April 15th, something like that.
Mhm.
Has anyone ever filed for an extension before?
Yes, sir.
Yes. Okay. 1, 2 people.
I was given exactly in the military.
Okay.
Yeah,
So
back-
when I was a W-2 employee, I was ready with my taxes to file on like January 1st. It was great. It was easy. Life was awesome. As an entrepreneur, your finances get a little bit more complex, and sometimes you got to file for an extension. When you file for an extension, it only means you're only asking permission to submit your specifics at a later point. You are not getting permission from the government to pay your taxes later. That is very important. So you quite literally have to make your best guess and pay your taxes on April 15th. Then you can file within the deadline, the new deadline, and then get a refund or pay additionally. Is that very clear, guys? Yeah.
Yes.
Okay, super. Yeah, do not try to pay your taxes like 6 months late. Government will not like that. Make sure that you're guessing and sending some money to the best of your abilities. How many times can you contribute to your taxes to the IRS per year? Does anyone know the answer to that question?
4 every quarter. That was a quarter.
Every quarter. It's technically 4 times a year. It is not divisible by a time frame. It's just 4 times a year. It could be the first 4 days of the year if you wanted to, but the most ideal time is every quarter. So every quarter you do a guesstimate and then you send in your taxes. You are not required to do this, but if you have a challenge being disciplined with your finances, right? If you have a challenge with, oh my God, there's all this money sitting in this account, I wonder what I could do with it. Every 3 months, send the IRS a check. As a new entrepreneur, the rules will change as you grow in your entrepreneurial journey. Overpaying your taxes is better than underpaying them, because you will always get a refund, right? So I know some people out there go, oh, but you're giving the government free money and they can charge you, it's interest-free money. Well, if you really look at the interest that the bank would give you otherwise, you're forking over like $20 to the government, all said and done. Like it's not that's a way better cost, losing a figurative $20, than what the other side could be if you don't have enough to pay or have to go on a payment plan or something like that. So always better, at the end of every quarter, send some money. If you have the discipline to keep it until the end of the year, then do that, because then that gives you a little bit more control over your flexibility of your deductions, etc. But that's what I would say. Sam, any thoughts on that?
No, that's correct.
Perfect. Thank you, sir. What are some common mistakes? Sam, do you have any common mistakes that small business owners make with taxes? You covered the biggest one, which is trying to do it yourself.
That's what I was gonna say. It's just trying to do it all yourself. It can get very overwhelming very quickly. And I think just having someone help you is important. I think most people probably here were using, before being a business owner, you can use TurboTax, you can use just a basic software to get it done. After becoming a business owner, I just wouldn't recommend that, because then you just can open yourself up to a bunch more mistakes that way. So having somebody else that does business tax returns kind of be looking it over is important. So no, that's kind of my biggest thing as far as other mistakes. We talked about not paying your payroll taxes.
It's a catch-all. Okay, great.
Yeah.
Yeah, if you have professional help, they are going to guide you. I am a huge believer that if you are not an expert in something, which I would say everyone in this room is an expert in martial arts, and that is what you're an expert in, right? You're not a tax expert, you're not an accounting expert, and that's okay, except for maybe Mr. Peters. But the rest of us, and that's okay, right? That we're not. Then we need to get help for that. We need to reassign that to someone who knows better, has more time, does this for a living, etc. Those are good costs to the business because they will keep you out of trouble, they will keep you compliant, and they'll give you a good picture of what actually is going on in the business. Your profit and loss statement every month is very important to look at. Most small business owners don't look at it. Some people don't even know what it is. That is what's going to tell you your accrual accounting. This is not even on this, but can somebody tell me the difference between cash accounting and accrual accounting? I hear a no from Mr. Wano. Anyone else? No from Mr. McGee. One more time. No, even from Mr. Peters. I thought Mr. Peters would have the answer. He knows everything. Okay. The difference between cash accounting and accrual accounting is that cash accounting is simply counting dollars in and dollars out. It's when you open your bank account and go, how much money do I have? That's cash accounting. Accrual accounting is what these huge corporations do, because they might get a payment for 6 months on the front end and then only earn it over 6 months. Or they depreciate an asset that they pay for in the front and use over 5 years. This gives you a balanced approach when your income and outflow are actually up and down. The best way to judge a business's health, are two things. One is your accounting in terms of accrual accounting, right? Looking at your P&L. And the second would be your cash reserves. Do you have enough cash for your short-term liabilities? If both of those look good, we consider a business to be healthy. Sam, can you add more context on that point?
So most of the schools are going to get their a P&L, everybody, is a profit and loss statement. And again, it's not, you could do this yourself. You'd have to have a software like QuickBooks or some other software that you're entering in every transaction, into. But again, if you use Timothy or use somebody, then they're automatically, that's what they'll do on your behalf. They'll download all the transactions, they'll put it into this software called QuickBooks, and then at the end of the month, it'll spit out this statement that says, here's all the money you brought in the month, and here's all the money you spent in a month. And that's important because it shows you how profitable your business is and what's going on with that. And so you can make decisions based on that. And so you will need, and actually, like, I don't know if Dyson is still there, but for those of you that are using Timothy, you 100% should be asking them, hey, every month I'd like you to send me my profit and loss statement. Now, those profit and loss statements, though, Ramu, maybe one small adjustment to what you're saying, they are based on cash accounting. So they're all going to be, hey, these are the dollars that came in and these are the dollars that came out, just because our accountant pretty much only does cash accounting. And so that is what it is. It's still valuable. It still looks good. It still is good. And then you can average that out over a period of months. So you do need to be receiving that and asking for that every month.
But is our equipment being depreciated, Sam?
Yes, but I mean,
We accelerate, depreciate that.
Yeah. Most of it's going to be like, it's such a small, yes.
So that's right. Every business is unique, right? By the way we do our contracts right now allows us to do cash accounting and not accrual accounting. Here's an example. If somebody signs up for a 1-year membership, right? And they say it's a 1-year membership and I'm going to pay you $1,200 for this membership. You can only claim $100 of that every month. You cannot spend all of the money up front because they're paying for a time. Right now, what we do is they're paying for a result and we give them a guarantee. So because of that, that's a loophole around it that allows us to take all of the money up front. We do not have to amortize that amount over 3 years, right? They pay in full. It's us. It's ours this month, right? That's the way we've written our contracts. So our business has been set up to do cash accounting. So you guys don't have to really worry too much about that, which is actually makes our life a lot simpler. With that said, when we talk about depreciation, if you buy a business vehicle, you can accelerate You can do accelerated depreciation and things of that nature, but those are some very advanced topics. Maybe not for today. Okay, great. Let's get to the second one, deductions and credits. Wait, yeah. Do you guys have any questions on what we just talked about?
No, sir.
Okay, great. Deductions
I
and
do want
credits.
to
Yes, sir.
probably circle back to this idea how we set these contracts up. You said, we don't need to talk about it now because that's more detailed, but just to understand that, so that moving forward, if we change things or we can follow the same path.
Absolutely. The way it's set up right now is probably going to be the best for you guys because it allows access to your capital. There's nothing more daunting than having money sitting in your bank account that you can't use, and then you accidentally spend it and you're in violation. That's like the worst thing that can happen. And a ton of small business owners get in trouble for that. It's called conversion, depending on the type of business. It could be commingling. Those are serious offenses. And that's actually something we're trying to navigate in our property management company, like deposits. You have to hold deposits, but you can't touch your deposit. You accidentally spend $1 of your deposit, somebody's going to lose their license and their livelihood, right? So like that kind of stuff is the same as when you're on a monthly contract and they pay in full, you can't touch that money until the date of the anniversary of that contract every month for that specific month, right? Sam, did you have something to add to that?
No, just I agree with what you just shared. It'd be like there'd be no purpose if you did it the other way. There'd be no purpose to having people pay in full.
Right. It wouldn't be any benefit to us.
Yeah. The reason we have the pay in full is so we get the cash up front and we can use it how we want.
Yep.
We need cash reserves, obviously, for crazy things or refunds or whatever, but yeah.
Okay, so here's a beautiful thing about small businesses in America. The government wants small businesses. They want people to be entrepreneurs to create wealth for the country. They want small businesses to create jobs for the community, because you know what jobs provide? Payroll taxes. So what they do is they incentivize the job creator, which is now all of you. So you guys now all have access to more tax advantaged strategies that you do not have as an employee. Meaning when you have a business or an LLC, could be a sole proprietor, which is a non-incorporated business, or all of you right now an LLC that has been incorporated. Side note, if anyone ever asks the best kind of company to incorporate, it is an LLC. Hands down. There's not a lot of debate in this topic, in my opinion. Unless you're trying to do a startup, then an S Corp would be good, so you can sell shares. But if you're not trying to liquidate your shares for capital, LLC all the way, every day, no debate. So back to this, what are some of these tax advantage strategies? The government legally allows you to couch your personal expenses into your business to reduce your taxes to incentivize you to run a business and create wealth for the country. What does that mean? As an entrepreneur, you are going to incur expenses to run your business. Now, that could be seemingly personal because it's your business, but it's really a business expense. For example, all office supplies, your printer, your laptop, your study at home, all of those are business expenses. Going forward, anytime you buy a computer, anytime you buy your cell phone, your cell phone bill, right? Your home internet bill, all of these are business expenses. Because let's ask this question in reverse. If I don't have internet at home, can I conduct my business? Probably not. No, sir. Yeah, you cannot. Therefore, it's a business expense. It does not mean you have to put it on the business credit card. You can account it from, just like a spreadsheet and claim it. That is okay for a small business. But to keep it clean, I would strongly recommend that you do change it over to your business credit card. It's not required, but it makes it very easy. Because guess what? The difference is that I have to remember every month to go in and see how much did I spend on my phone bill this month, if it's slightly variable, right, or my internet, and then I have to account it here. Versus if it's on my business credit card, I just go print statement, copy, drop it into the Excel file. I'm done. It just makes your life so much easier. So for the sake of ease, I would recommend you to do it that way, but you can claim it regardless.
Definitely cleaner, definitely super cleaner to just put anything that you think of business on business. And then it just
Yes.
easily flows into, because remember we talked about that software that, your accountant or you are going to use called QuickBooks. Really what these guys end up doing is they just go into your business credit card. That's why it's just very important to have a separate bank account for personal and a separate bank account for business. You got to have that, right? They'll just go into and a separate credit card for personal, a separate credit card for business. Because
So
your accountant's just going to go in and just download all the business stuff, put that on your tax return kind of automatically. So if it's over in personal, it's really weird to try to be like, well, no, I spent it on my personal card, but it was actually a business thing. Like, nah, just anything you remotely think is business, like you just put on the business side of things, right? And I expense a lot of things. I mean, my whole life is business. And sometimes my accountant will be like, was this really business? Like, it seems like a very personal charge. I'll be like, no, man, like you don't understand. My whole life is business, like everything. Yeah, but it was at TJ Maxx. You don't understand. Like, if my wife doesn't have nice clothes, I can't run the business.
that's a great dovetail into
We
the
are
fun
recording.
side of tax deductions. So I was talking about this with Mr. McGee earlier, right? Mr. and Mrs. McGee are co-own this business, McGee Services LLC. Well, I told Mr. McGee yesterday that if he wanted to host a board meeting in Hawaii, right, that he is legally welcome to do so. He just needs to make sure that there is documented communication between all board members, aka his wife and himself, that they're going to Hawaii for the primary purpose of this business meeting, that they're allocating at least 1 hour or more for this business meeting, that they're going to have a substantive talk in Hawaii on site, that there's an outline for the meeting and an outcome that have been documented prior, during, and after, and all expenses are properly tracked and explained on a spreadsheet. So their flight, their hotel, their food, all of that is covered. What gets very questionable is like extracurricular activities, right? You do 1 or 2 things where it's just him and his wife, then that's fine. But if they're taking their kids out on a cruise, then the IRS goes, hey, that doesn't really seem like a business expense to me. Well, that's okay because they just paid for both of their flight tickets, their hotel stay, their kids might share the room, who knows, right? Etc. So a lot of these things can be written off. Now, here's something really random and kind of funny. My parents actually went to Hawaii like 6 months ago, and my dad's a real estate broker, and he's like, he saw some Remax signs in the yard, right, when they were driving around. So he called the Remax office and he was like, how much do houses cost here? And he just spent 4 hours trying to do like at the Remax office, seeing if he can buy a house for an Airbnb there, running the numbers, just genuinely because that's just who he is. He came back home and my mom, yeah, we spent half a day at this Remax office and they sent us a bunch of emails. And I was like, oh, that's very cool. Did you guys plan that? And my mom's like, why would I plan to be at a Remax office in Hawaii? And I said, well, you guys understand the whole trip is tax deductible now, right? And that's when I caught their attention. They were like, oh, that's a good point. They wrote off their whole trip. Like, it's just, they went for a week. They wrote off their whole trip. They have so much documentation, emails, records, whatever, but your records have to be on point and provable to the IRS and your accountant. If your accountant feels there's not enough records, they will not put that in a business expense, right? So you have to be very sure about that. So those are some fun, fun examples. Of course, your gas, because you're driving to and from work. Let me rephrase this. If you own your car, you can only write off your miles, your business miles. Then the reimbursable cents per mile are determined by the IRS every year. Do you know why businesses love to lease things? Because you can claim 100% of the cost on a lease because you don't own it. If you own a car, the IRS says, well, you get to use this car outside of business purposes. You're doing all these things. So you only get to track your business miles. So what I did is right after I got married, my car went kaput. My wife's car went kaput 2 weeks later, and we needed a new car. My wife went, oh, I want a really nice car. We went and we leased a Range Rover. And the reason I leased it instead of bought it was because I get to write 100% off of it in my business. Not only do I get to write off the maintenance, the lease amount, but also the gas and car washes because it's a lease. If I own my car, car washes and gas do not count. The payment I make does not count, only the reimbursable miles. But if I lease the car, it doesn't matter how much I drive the car. It doesn't matter where I drive the car. It doesn't matter any of it, right? So that's the real benefit to leasing versus owning in a business. It's just the way tax law is written. I never understood as a kid why businesses would lease something for 10 years when it would be cheaper to buy it. And I realized it has everything to do with the way accounting works, because they actually save money by leasing than by buying, which is counterintuitive. But the reason they do that is because now I get to save money as a business owner, and I create a business for somebody else where they're also making money, right? Now they're creating jobs, they're paying taxes, etc. Everybody tracking with me so far?
Sure.
Yeah? Okay, super. Some other, oh, by the way, when you say your office at home, how that works is, so right here, I'm in a room. This is the second bedroom. I live in a 2-bedroom townhome. I can take, right, my home is roughly 1,500 square feet. And I'm going to say this room is, I don't know, 150 square feet, let's call it. I can take my mortgage and utilities and apply my studies square foot against my whole house. For this example, we'll call it 10%. I can write off 10% of my mortgage and my utilities as a business expense because this is my office. Because if you went, you know how Sam has a Tabris as his office? Well, he's paying for that, right? So if he's paying for that, you can pay for your home office. Those are all eligible tax deductions. Sam, is there anything I did not cover that could be an eligible tax deduction?
No, with your, I will add this one little thing. You're right about the car stuff. There is actually, you can actually take your car deduction in one of two ways. You can do mileage, but like for me, it's just a pain in the butt to track all the miles. So I do actual expenses. So I do like actual repairs, actual, and that is another legitimate way you can write off car expenses. So obviously I don't have gas because I have an electric car, but like
Sam, you're only eligible for that because you're an entrepreneur that has 6, martial arts locations that you have to drive to. You're a real estate entrepreneur with 30 homes that you have to drive to. So your whole car can be written off. If you have one place of work, you cannot write off your core expenses.
I didn't think that was the case, but yeah, okay.
I know that because my dad could. My dad does what you're saying, and my tax accountant wouldn't let me do it.
Gotcha.
For the longest time.
Okay.
I can do it now because I'm a realtor and I can claim that my car is required to go everywhere around the city and to other cities for work. So they'll just let me deduct like 80% of my hard costs of my car.
Yeah, and I guess I wasn't saying necessarily the whole car. I was just saying like if you go on a trip, you can, instead of doing mileage, you can deduct the hard costs of that trip. So hey, I need gas for this trip. I'm going to go to this trip. I have to fix a flat tire for this trip. That's as long as it's a business trip or a business drive.
Yes, sir. That's correct. Yes, I do. Yes. There's a lot of nuances there. Is everybody tracking?
So question on that. So like when we go to summits or something like that, we drive our personal vehicle, gas, repairs, anything like that.
Absolutely.
Yeah.
But you have to, when you're accounting it, you can't just like throw it on your business credit card and then not make any notes on it. You have to go in and say, I'm going to the summit for this purpose, and these expenses were all incurred when I go. When you're traveling for business, all of your meals are covered. If you are leaving your hometown, right? I think the IRS has some sort of mileage. It's like 100 miles or whatever outside of your house or your hometown, whatever that requirement is. Every single penny that you spend is a business expense, provided that is a business trip. For example, like when I came last week to North Carolina, from the time that I'm at the airport to the time I get back to my home airport, every dollar I spend is a business expense. What sometimes the IRS does not allow you to deduct, though, is like if you're if you're like an employee, driving to work and back is not tax deductible. But if you're a business owner, maybe. But if you're paying yourself a salary, then you're driving to work as an employee. But then only your drives up on the weekends count as an entrepreneur. If you teach 5 days a week, you cannot deduct your drive to work. It does not work that way if you're paying yourself a salary, because you're driving there as an employee. But that's where you get to talk to your tax advisor. You can talk to Timothy and see if, what are the nuances in the law? Is there a way where I can circumnavigate that by reclassifying myself as primarily the business owner and an employee second? There might be ways to do that. Depends on your state and unique situation. All right, next topic. The importance of tax planning for a small business, especially your first year of operations. So, Sam, what would you like to share about tax planning that we've not already shared?
I think for I'm just trying to think of what's really relevant to these schools and the people in this room. I think tax planning, you've already mentioned like talking with an accountant to see if you should send in something every quarter. And they might look at your profit and loss statement and say, no, you don't need to send anything this quarter. And that's okay, but that's a conversation that's nice to have with your accountant. Deduct as much as you can, put it on the business credit card, the business bank account. That's valuable. Yeah.
I think we already talked about structure. We talked about deductions. I think one other topic that I'll add on this before we move on is delaying income and accelerating expenses. I know that's counterintuitive, but if you want to pay less taxes, then spending more in the business today and making money tomorrow is always going to be better, which is counterintuitive to I want all the money up front and I'll give you the service later. And that's the dance that you have to do as an entrepreneur, right? Anybody have any questions on that?
Yeah, like the way that practically plays out, I think, is just like, okay, it really only plays out in December, because the only real date that matters, since we all use the calendar year for our tax year, is like I could get a big check on December 20th, or I could ask them to pay it to me on January 1st. And therefore I'm going to worry about it next year. That's really practically the only way that works. Or I could, if I'm going to have a big tax bill, I could prepay my rent. I've done that in the past where it's like, well, I'm going to have a big tax bill. So on December 30th, I'm going to prepay my rent for the next couple of months, because I'm just going to, that way it'll look like I spent more money in 2022. It all kind of evens out in the end, because you still have to worry about it next year.
Because you're not paying next year, so you're going to show more profit.
Yeah, so just pushes the problem a year further into the future. But it's a strategy you can kind of use in December, really, is if you want to get really creative with paying your tax bill differently in that time. So yeah.
Absolutely. Okay. So any questions on the tax side before we get to the personal finance side? No questions. All right, let's go to budgeting and cash flow management.
Ramu, I have to drop off at 12:15 Eastern time, just FYI. So
Okay, I'll take this.
Yep.
You want to say
Yeah.
your final thoughts, sir? Because that's 3 minutes from now.
yeah, you're going to go through, Ramu's going to cover budgeting and cash flow management, some debt management, retirement and savings stuff. No, I think this stuff, actually, I know you've got a super great handle on, so I feel really good about it. Let's just keep going and I'll hang out here for the next couple of minutes.
Great.
Mr. Uyghur,
We're
Mr.
going to
Ron,
budgeting and cash.
question?
Yep.
I don't think
Yes,
they can
sir.
hear me.
Barnes got a question.
Yes, profits, or is there a, should we set up a threshold for if there is this excess amount of profit or monies, we want to move it into another area, another business savings or something else?
Absolutely.
100%. Yeah, that's a great.
You should
Yeah.
have a emergency savings for your personal and business. That
Can I-
was
can
a
I s-
lesson that sorry, sir, go ahead.
Is
You
it?
go ahead.
Right.
So if we talk about 3 months of personal expenses, right, to run the family, same thing is true for the business.
And
You need
also
3 months of
looking-
cash reserves to run the business if you get $0 in income. sir.
Should,
Mhm.
it's another strategy to not always just have it piling up. You understand what I'm getting
The
at?
cash?
In the business account versus keeping it.
Yes.
Yes.
Take a distribution. Take a distribution. Take
It's
the extra money
if it's a
home.
single LLC, you don't. Yeah, if it's a single member LLC, there's no distributions because it'll just flow through your tax return. But what I
Oh,
usually do with this is
Doesn't even matter.
what I usually do with this is just, yeah, you can create a bank. Like I just pick a number. Actually, Ramu talked to me through this the other day because I was like, it's helpful to have that number in your mind of like, okay, in this bank account, I feel comfortable when there's X thousands of dollars, right? Like whatever that number is. And then anything above that, absolutely, if you skim it off the top and you even just put it in a money market account, you don't need to decide to invest it right now, but you just put it in a money market account and that gets money that then it accrues a little bit of interest. And the most valuable piece of that strategy that Mr. Barnes just brought up is that you don't see it. It's not there. So you kind of like, at least for me, I'm kind of like operating on this like urgency scarcity thing of like, okay, I still have to hit my numbers this month. I'm not like comfortable all of a sudden because I had a good month last month. So I kind of get it out of there. I put it in something in a different account. And then as that other account, that money market account, which is accruing a little bit of interest, but there's money market accounts right now that give like 3 or 4%. If you're making a little bit of money on it, and now you're kind of like building up something bigger so that there is an investment. You can go invest in, buy a rental property or buy this or buy whatever. So I'm a huge believer and I get very passionate about like skimming off the top and just keeping this minimum number that you decide, which might be equal to 2 months expenses or 3 months expenses in the actual account. You're skimming it off. You can use that for investments later on is really what you should be doing.
Anything above that that's retaining is your profit. That is your profit from the business. You should take that home. What you do with it, take it home. Yes, sir.
I'm so sorry. I know that Mr. Uyghur has to go. This is probably a little bit different level, maybe. Can the business take portions of that profit and invest in?
Yes, the business can invest or you can invest personally. That it all depends on what the investment is.
Yes.
If you're doing a private placement investment, like you're doing a syndication or you're doing money market account or something like that, an LLC is eligible to go and invest because anything that's a limited risk, an LLC can invest. But anything that is an unlimited risk, like buying a house, the bank will not let the LLC buy. They will only sell it to Mr. Barnes. They will not sell it to Mr. Barnes's LLC. So in that event, they don't care where the money comes from, but the loan and the income is not directly in the business. But because you are operating in a disregarded entity, sir, it does not matter who takes the loan and who gets the income. You can take the loan and your business can make the income and the IRS sees it as one entity. Or vice versa. Your business can take the loan and you take the income and it's still the same. So For you, sir, your individual situation, your money is the most fluid. Your business and your personal, there's no changes. As long as you're accounting it correctly, it's all yours. If that makes sense.
That's right. It's pretty much the same. The business investing it is, yeah, pretty much the same because you're going to pay taxes on it kind of regardless.
The other thing is that, we talked about claiming your expenses and income in the business, right? So like I have a rental house. My wife and I have a rental house. The loan by Sam.
I guess.
We have the loan is in my wife's name, the title is in both of ours names, but I account the income and the expenses in my business. And the government's okay with that. Even though the loan is on my wife's personal name, they understand that we don't have any partners in this. If we did, then we would roll into our personal based off of our percentage of ownership, and then we'd account it that way. So that's always okay. The only thing we understand is you do not have the same legal protections that the LLC provides you if it's a personal loan, right? You don't have, I can't say, well, I'm accounting this through my LLC, therefore I have limited liability on that rental house. No, sir, I have unlimited liability on that rental house because it's a personal loan and I'm personally on the title. Unless after 13 months of paying rent or paying the mortgage, I do a quit claim deed and transfer it into my business, then it's protected by my LLC. But that's a very different story. All right, sorry, I might have gone on a tangent there, but
Thank you. No,
is that
was
helpful,
good.
sir? Or is there any more clarity I can provide? Perfect. Okay, so on the same line of commentary, budgeting and cash flow management for your business and for your personal are very important. Now, as an entrepreneur, your income is variable. So we know what we should theoretically make. One month we might make more, another month we might make less. So how does that work? When we make more a certain month, it is very important to not spend it and put it into savings. It's so let's talk about budgeting, right? We have to prioritize essential expenses. What is an essential expense? Food, shelter, transportation. These things are very important. Now we're gonna have to make everyone is huh, are you guys frozen? No, Mr. Tager
sir.
just looks like he's frozen. Okay.
Trying to listen to you.
Perfect. When we're talking about expenses, those are the essential expenses. So we need to understand what those expenses are and make sure that we're staying in that budget every month. And that's our minimum. When we know our minimum, we can save up. You need to have three months of that minimum in a bank account to provide some psychological safety for your family. There is nothing that stresses out spouses of entrepreneurs more than knowing if they can pay the bills, right? So you have 3 months of savings. They always know you can pay the bills. And we know that we will be able to make money within 3 months. We're just going to go hustle, bust our behinds, and we're going to bring in the money within 3 months. If you ever have to dip into that reserve fund, your first priority is to refill that reserve fund. If you take $1,000 out because you're short this month and next month you make more money than your minimum, the first extra $1,000 goes to reserving, backfilling the reserves. That is very, very, very important. You cannot let that deplete or stay depleted. So we have to understand what our essentials are and then go from there. So anything beyond the essentials, we have to categorize as a luxury expense. This is a short-term move, guys. It's not a long-term move, but for the first year of entrepreneurship, you got to tighten your belt and you got to be like, hey, eating out needs to go down. Vacations need to be pushed. We need to focus on stabilizing the business. So that's very, very important. We talked about the cash reserves for emergencies for both personal and the business. The other thing is using tools. Make sure that you have good tools to track your money. Simple is always the best. If you are afraid of your finances, it's probably because it's too complicated. Do you know something? I handle my finances pretty simply, in my opinion. I had a conversation with Sam a couple of months ago, and I was shocked to find out he handles his finances much more simple than I do. That came to as a big shock, because I was like, man, you have a way more money than I do. Like, how are you handling it so simply? But I realized that's part of the charm. Money is not daunting for him because it's easy for him to understand what he has, how much money is going out. Very, very simple. So how do we do that? And how have I done that in my personal house? I went out and found the best credit card that I really, really love, and I got it. And then I closed out all the other credit cards. I have one credit card that my wife and I share. She's an authorized user, and that's it. All of our personal expenses go on that one credit card. I have one business credit card. My wife is an authorized user. So if she has a business expense, she puts it on that credit card. It was very important to my wife and I that we also had some privacy and some freedom from the other person. So what we did is each of us have what we call a blind credit card to the other person. So I have one credit card that's just mine, and she has one that's just hers. There are no more credit cards in the family. That's technically only 4 credit cards, because there's 2 that we both share, and then each one of us have 1 each. So each of us have 3 credit cards, but it's only 4 total, if that makes sense. Everybody tracking with me so far on that?
Yes, sir.
Perfect. That really helps, because guess what? There's nowhere to hide an expense. If it's a business expense, it goes in the business credit card. If it's a personal expense, it goes in the personal credit card. And that's it. We both take 5% of our gross incomes and we put it separately in our blind account. And that's our free money. That's our fun money. That's the money I can spend guilt-free. And for some of you in the room, yeah, you guys all know me and how much I love Legos, right? So if I want to go buy a $100 Lego kit, that comes out of my 5%. And when my wife wags her finger and says, why would you do that? I go, honey, it's from my 5%. I can give her a kiss and be happy about it, right? Because it's my play money. Or if she wants to do her nails for the 2nd time this month, then that comes from her 5%. First time's on the family, 2nd time's on you, honey, right? It's that kind of understanding. That little bit of flexibility is a very, very, very important, guys. That 5% or whatever number that you guys come up with, I recommend no less than 5 and no more than 15. 15 is a pretty aggressive number in my opinion, but 5 or 10% is reasonable. Personal expenses, and this is whatever you bring home, right? This is not however you want to deal, make that number true. This is not your expenses for gas. This is not your expenses for, the family vacation. No, this is for you as an individual, for you to go out and have drinks with your friends, regardless of what's going on, right? If you ever think that, hey, this is not a fair expense right now on the family, it comes out of your personal play money account. That's very, very important. Anybody who does not have that account, you guys are going to go crazy, because you're going to work much harder than you already do as an entrepreneur. And if you don't have a little bit extra cash to blow on yourself, it makes it very hard. So and here's the beautiful part about that, guys. When you don't have that, you want to go spend it. When you have it, half the time you don't even care to spend it, because it's yours. You can do it whenever you want, right? So like that's your psychology around that will be an abundant one instead of a scarcity one. So back to, so the reason I shared this structure is because it's very important to have simple finances. Here's another really cool tool. I go in and I have a bunch of different bank accounts in the same bank account. I don't use multiple banks. I only bank with one bank because it's very easy. You pick your favorite bank and move all your accounts to that bank. I like Chase because there's a Chase, JP Morgan Chase at every corner in Dallas. They have a huge office here. Maybe that's why, maybe not. I don't know. Plus, I love their customer service. All my credit cards are with Chase. My wife has one credit card with Discover, but my business and my two personal are with Chase. And my business bank accounts and all of my personal bank accounts are with Chase. So I log in on one app, and between two tabs, my business tab and personal tab, I know exactly how much money I have and how much debt I have. Period. The only things that don't roll into that login are my mortgage payments. But guess what? They're automated out of that account or accounts. So I can click a couple of buttons and figure that out too. One-stop shopping for your finances is going to help you simplify and know exactly what's going on. There's nowhere to hide, and you get the whole picture all the time. You get to know, it's just straight honesty, right? Whether you think you have more money than you think you do, or you have less money than you think you do, you can't hide from it if it's all in one account, right?
Sure.
How I organize it beyond that is I create buckets. The term that I prefer is called buckets, right? So I have a vacation bucket, I have a charity bucket, I have a personal bucket, and then I have the family bucket, right? So salary goes into the family bucket, which is where the mortgage gets paid out of, which is where the car gets paid out of, which is where the credit card gets paid out of. The day after I get paid, I have auto deductions. I get paid on Thursday, Friday morning, an auto deduction that I don't go do manually every month. It just happens by itself. 10% goes to charity, 5% goes to personal, 5 or 10% goes to vacation. Whatever that is. I have an emergency savings account. 7.5% goes to emergency savings, whatever that is. As a business owner on my business side, 20% goes to tax savings, right?
Yes, sir.
So all of those are auto deducted for me. Business though, your 20% will be variable income. So you will have to manually move the 20% after a check clears or ACH clears. But what this allows me to do is log in, and if my wife and I want to go on vacation, we go, okay, how much is this vacation going to cost? It's going to cost $2,000 to go on this vacation. Okay, open up the bank account. Okay, sweetie, there's $3,200 in this account. We can afford it. Let's go. Or this vacation is going to cost $2,000. I log in and go, there's only $800 in this account. We cannot afford this vacation. And that's that. We change the vacation, we change the location, we change how much we're spending. Or if we don't want to change it, then we're not going now, we're going later. And that's it. And it's not me saying no to my wife. We just don't have the money already there. And that's it. It's now I don't have to feel bad about myself like I can't provide for my family because we've agreed to a system, and the system says we can't go. That's it. It's just, it takes away that weight of saying no. And on the contrary, you also know what your upper limit is when you do go on vacation. Because let's be real, how many of us stick to our budget when we go on vacation? Not I, right? No, right? Has anybody gone on a budgeted vacation and came back saying I saved money? I'm yet to hear a story. Yeah. But how much more do you spend when you're there? How much ever's left in the account? That's it, right? That's the beauty of it. Then you know, no more. Time to cut it off. Imagine doing that for everything. For charity, for personal, for the family, right? So that's the way I approach it. What those buckets are, that's for you and your family to decide. How much percentage goes into those buckets, that's for you and your family to decide. If you can live off of 60% of your income, then you are living a good, balanced life. Because you owe taxes and you owe different allocations. By the way, when I say 60%, 60 or 70% of your net income post-taxes, if you can live off of that, then you'll have margin for vacations, charity, personal, savings, all of that. But when you really factor that in with taxes, etc., you're living off of half of the money you make top line, 45 to 50% of your top line income. That really shifts the focus. But when you do that, that's what the rich do, guys, because they take that delta and they invest. And then that investment produces cash flow. And here's a question for you guys. The money that is produced by investments, do you think rich people reallocate that into our system of, buckets? Or do you think that they take all of that and put it back into the investment bucket? Yeah, Mr. Peters, you're on mute, but I heard what you said. You said they put it back in the investment bucket, right? Then that keeps rolling and rolling and rolling. In the first 3 years, 4 years, it won't even feel like it makes any difference. But there will be a tipping point where your investments are going to be parallel to your day income. If you have that strict policy and discipline with your finances, where one day your side business will overtake your main business. And I'm very happy to share, and I think all of you guys even know this, that's what happened with Mr. Weaker.
Yeah.
Uplevel is where he made all of his money. He lived very, very frugally. For many years, he lived off of 30% of his, no, forgive me. He lived off of 10 to 15% of his gross income. He lived like he was poor. And of course, he could because he was single and he had a bunch of roommates or whatever, and he would invest 80%, 80 to 90% of his income. And he did that for so many years that now his side business makes more than Uplevel does. Isn't that insane? But it took him 15 years, guys. It took him 15 years. This doesn't happen overnight. But it is very possible. And it is also, the whole goal is stability, right? The whole goal is cash flow. Imagine if you had 2 or 3 different sources of income. One was your investments, one was Uplevel. That's awesome. So simplicity is the best way to approach this. So what happens if you have, a downtime in your business and the cash flow is not good and you're starting to deplete your emergency savings? Well, first you dip into the emergency savings. When you have to dip into your emergency savings, at the same time, you've got to stop all what we're calling luxury expenses. Anything above the minimum needs to stop because your emergency savings is not accounting for anything more than the minimum, right? So that means no eating out, none of that. Like you've got to say no more and cut back. Here's something else a lot of people don't know that you can do. Negotiate with your creditors. Everything is negotiable. Everything is negotiable. Call your credit card company, call your mortgage company, call your landlord for the lease on the school. Renegotiate, talk to them. Be proactive. People will work with you if you call them before you have a payment due, because then you're being proactive and you're building a lot of trust. Missing a payment, underpaying, and then calling them, they're not going to be very happy and you're not going to get a lot of cooperation. So if you need to renegotiate, do it in advance. Another great possibility, if you can do it, right, is balance with alternative income. AKA, you might have a spouse. They might have a day job. That can really help. Doesn't matter what your spouse's day job is. It could be lower than your income. It could be higher than your income. Anything is helpful. Your investments that eventually start producing cash flow as well. That also helps. And if you're in a tight spot, then that would be the time that you use the income from your investments. Savings, dipping into your savings is for this time. Here's the other part of this. You will have more anxiety about this than it'll actually be true. The anxiety is good. You're going to get anxiety and be like, oh my God, I don't know if I can pay the bills this month. And instinctively, you're going to go, well, that just means I got to work harder. I have a problem to solve. And you're going to go and you're going to get 10 new people that sign up 2 or 3 people that pay in full the very next week. There is no greater motivation. So the beautiful part about that is even though you go down, you're going to have way more motivation, and you guys have the skill to then go and make that money, right? And keep it going, which is back to Mr. Barnes's point of, hey, if there's a lot of extra money, siphon it off to a place you don't see so you don't get comfortable. You got to keep yourself hungry. Okay. Any more questions? Any questions on that before we get to the next topic? I promise I'll wrap up in 20 minutes. Any questions so far? Yes, no, no. Okay. Perfect. So how do we manage debt, especially when we're on a variable income or as an entrepreneur? You got to prioritize your debt payments, right? You got to figure it out based off of interest rate and due dates. Before it's due, paying off the potentially higher interest rates, you've got to address that. There's a saying, one alligator at a time, right? Whichever alligator is closest to your boat, you fight that alligator first. What's the biggest alligator closest to your boat? It's some combination between due dates and interest rates. And you've got to weigh that balance and pay that off first. Not getting into further debt is way, way, way more important than paying off your old debt. Because if you're paying off your old debt and getting into new debt, you're just swapping your debt, right? It's not, and it's going to be worse for your credit score than anything else. So keep all new debt at bay. And if you have debt, pay it down. And your recurring debt, pay it off. If you need to, consider, debt consolidation or refinancing, if that's a possibility for all debt. Communicate to your creditors about other debt that you're paying off that actually inspires confidence for them. You can just openly call if you have multiple places that you owe bills and be like, hey, I'm working on this bill right now. I'm going to get to you in 3 months, right? They might not like it, but at least they know it's coming. It's, put yourselves in their shoes and think about what you would know. Would you rather know something's coming in 3 months or never at all? Right? I would like to know that it's coming in 3 months. So having that open communication with everybody is very important. Something else that's really important is when you take out loans or credit cards, always avoid high interest rates. High interest rates are the death of your finances. There's no recovering from 25% interest rates. There's just not. Do you know what a credit card charges for unpaid balances? 24.5%. They'll start you off at 0%, then it'll go to 12, then it'll go to 18, then it'll go to 22, and then it'll balance off at 24.5%. And that's not, your credit card balance is not on just the stuff you didn't pay from last month, but everything else you swipe after that. The bank, when they pay you interest, they pay simple interest. When they collect interest, they collect compound interest. Do you guys know the difference between the two? Yeah? Mr. Peters, can you explain the difference for us?
Yeah, compound is when they keep if you owe $1, at the end of the day you owe $1.07 plus that interest, and they take that interest and that $1.07 and they keep adding on to it, so it keeps compounding it. It doesn't take that original dollar and just keep adding on to that.
Exactly. Thank you, sir. So you actually end up paying a couple of more points when it's compound interest than simple interest. So you just always have to know when you borrow, it's compound. When you lend, it's simple. That's just the system that works, unless you become a financial institution yourself at one day, right? So avoid high interest rate loans. What is high interest rate? And when does high interest rate make sense? High is arbitrary. The highest the interest rate has ever been in the United States is 18%, right? I mean, like the federal government loaning 18%. 2 years ago, 3 years ago, the government was giving away money for free at 0%. So let's talk about that. If you're going to buy a house and the interest rate is 8%, but you do the math and you're going to cash flow 12% cash on cash, well, that's a 4% yield. That's fine. Let's go for it. But if you're going to get an 8% interest for your primary home, well, we got to really think about that. Maybe we want to buy down the points, right? Maybe we want to do all these other things. So it's all related. It's all compared to what, right? Another thing to avoid debt as a new entrepreneur is limit personal expenses. We talked about this a little bit already, but don't take a loan for anything if possible, especially your first year. If you cannot pay for a new laptop in cash, you cannot afford it. That's it. It's that simple. If you want a toy, if you want supplies, whatever that is auxiliary to the business, then you have to be able to pay for it in cash. This is where we talk about, the inverse of what I said about, in December with your taxes. This is where the inverse applies. Don't always make sure that you are. I'm sorry, guys. I just totally went blank. I think I've been talking for a long time. We're talking about being able to pay for stuff in cash, right? So 1 second. Somebody keeps texting me. I'm going to put this on mute. Always, when you're paying for stuff, make sure that you use squeeze the juice out of the last product that you have and delay expenses as long as possible. The longer you can delay an expense, the more perceived profit you will make. The sooner and longer you can hold cash, the better it is for you because you have more options, which is the inverse of what I said earlier. So that's what I was trying to communicate. Also, always plan for unexpected expenses. Expect the unexpected, right? This goes right back into the, make sure you have an emergency savings. That's going to help not get into debt. Why do we get into debt? Because we don't have the cash to pay for stuff when we have a need. So we have our savings, emergency savings, that's going to save us from going into debt. Also, something else to consider. If your credit card charges 25%, I'm pretty sure you can go and take a personal loan at 10%. That's better than credit card debt, right? Theoretically speaking, I would never recommend that you do a personal loan for expenses. Not a good idea, but you get where I'm going with this. Maybe you can call your friend and your buddy will loan to you at 6% interest rate because their cash is just sitting in the bank. Way better than the 10% personal loan or 25% credit card debt. So there's always alternative options. Avoid high interest rates. And when we're talking about debt management, you can't talk about debt without talking about credit score. I was talking to Mr. McGee and shared with him that I've been blessed to be obsessed about, credit score and finances since I was in high school. And I would go into the bank, with my dad just for whatever. And I remember the branch manager would get up and come greet us and, be nice to us. And I was always like, that's so weird. I never see the bank manager coming to anybody else and shaking their hand when they walk in the front door. So I asked him one time, I said, hey, why do we get all this special treatment? He said, oh, your dad's a great customer. He's got a bunch of accounts with us, blah, blah, blah. And your dad has a great credit score. And I was like, cool. Tell me about how do I get a good credit score? He said, don't ask me, ask your dad. So I asked my dad, okay, what do I need to do to have a good credit score? I did all this research and they said, don't have more than a 40% balance and you got to do this and you got to do that. And it's a little confusing for me, but what do you do? He's like, yeah, forget all of that advice. It's like, okay. He goes, I have 2 rules. Follow those 2 rules. You'll have an excellent credit score your whole life. You guys ready for it? It's going to be super simple. Don't spend money you don't have and pay your credit card off in full every month. That's it. That's what my dad said. I said, what about this and what about that? He goes, 2 rules. Don't spend money you don't have and pay your credit card off in full every month. You really look at it closely, they're kind of the same thing. Because in order to pay your credit card off in full, you can't spend money you don't have. So if you you have to, whatever you buy, you have to be able to buy in cash. You put it on your credit card because we live in a debt economy and credit score is the name of the game, right? So you put it on your credit card and then you pay it off the next day. That's what I do. I am obsessive. I open my bank account every day, minimum 5 times a week. That's a high level of being obsessed. I pay off my credit card once a week. I used to pay it off every day, and I realized that that was a little insane. So I do it once a week now. Still kind of crazy, but that's why I have a great handle on my money. If you ask me how much money I have in this account or that account, I know because I checked this morning, right? That's the kind of handle you guys need to have on your finances. A healthy obsession on the tracking of your money is very, very important. If you ask Sam how much money he has in the bank, he can tell you roughly how much money he has in the bank. If you ask me, I can say the same thing, right? Sam might have, I don't know, I'm making this up. He might have 20 bank accounts from 3 different banks, but he always knows how much he has and how much is out the door and how much he spent last month and how much he's planning on spending next month. Just has a strong handle on that. So for good credit score, don't spend money you don't have, pay your credit card off in full every month. That will make your credit excellent. It'll make it bulletproof. It will also give you a lot of options. You'll get credit cards with higher limits. You will be able to get interest rates that are much lower when you go to buy a car, right? You're going to get interest rates at 3-4% instead of 9, 10, 12%, 13%. Yeah, right? The difference between an excellent credit and poor credit is 10% in interest. That's crazy, guys. I mean, you have to do what you have to do when you start off. There's no harm in there's no point in beating yourself about your past. The point is to look forward. The point is to make sure that you go, the next car I get, I'm going to make sure that the interest rate is 5% or less. That's important to me. Because that 8% interest is compound interest that you're going to save, right? That's money that you're going to use for something else. That could be your play money. Okay, before we get into retirements and savings, any questions on what we just talked about in debt management? No. Okay. So, in summary, for debt management, always know what you owe. Never be afraid to open your bills. You should always know what you're going to owe. You should always be, anytime I get a notice from my mortgage company about my escrow, I open that thing very fast. Because guess what? When they change your escrow, it's due next month. And by the time you get it, it's probably already a week into the month. So you got 3 weeks to figure out how to come up with the delta of your tax change or your insurance change, right? So just like that, we got to always be aware of what's coming up and be focused on what our next bills are, what all of our bills are, be cognizant of that. You got to always create a 5%, 10% section of your brain that's just dedicated to this stuff. All right, our final section, retirement and savings. We talked about emergency savings. We also talked about beyond that, any savings goes to investing. Now, that's kind of funny the way we talked about that. Because I bet you if we talk to Sam, he won't like that order. And that's not the order that I do stuff in. Do you guys know the difference between the poor, the middle class, and the rich? If you give $100,000 to a mindset of these 3 groups of people, the way and order they spend that money is the only thing that sets them apart. Here's a really crazy part. There are certain people that we think are rich that are not because of the way they spend their money. Think NFL players, think Mike Tyson, right? Mike Tyson's he's made like 150 million in his career and the dude's broke. So is he rich? No, not really. Right? And we've all heard those stories where the truck driver that never made more than $40,000 died and left $7 million to charity, right? To his local library. And you're just like, what the heck? That guy's rich. He's literally rich, but he never made more than $40,000 a year. So it's how you approach your money is what sets you apart. And that compounding of that mindset will take you very far. The rich invest first. Before they pay their taxes, before they pay their debt, before they spend any money on themselves, they invest first. They will determine how much they want to invest. They'll take that money out and they'll invest it. And then they'll spend money for themselves and they'll pay their debt and their taxes last. Let me also add an asterisk and say they have the convenience of large swaths of income to be able to do that. So although it sounds great, I am not there yet, right? If you don't give Uncle Sam, not Sam Wiegert, but Uncle Sam, what he wants is not going to fly very well. Unless you can afford a bunch of lawyers, which I don't think any of us can right now, you want to make sure that he gets paid. So, but that's a mindset. We'll at least take the first part of that of like, we're going to invest first. The middle class pay their debt first, do their needs next, and invest last. The poor spend on their personal stuff first, and then they kind of just spend all the money, right? There's no investing. Sometimes there's not even paying off all the debt. That's the hard part, and that's the difference. But the toughest part is it's so easy to sit and judge, but when we're talking about having a poor mindset, it's probably because people that group of people don't think that there's going to be more coming in later. They just want to enjoy. So I definitely feel that at a visceral level, but that's a scarcity mindset. When we have an abundance mindset, we want to invest first because we know it's always going to come. I always want to create that cash flow in. And if we can do the same, that's going to be the best. Money in the door gets pre-allocated, including my investment buckets. Then I pay my bills, and whatever's left over is what I live off of. If we can do that as an entrepreneur for the first 1 or 2 years, we can then shift. When our volume of income goes up, velocity of money goes up, then we can shift to the upper class, right? The rich mindset of I'm gonna take 50,000 out first, and then I'm gonna live off of another 50,000, and then I'm gonna pay off my debt last. And then anything left over that, I'm gonna invest still, right? But that's the goal. We can get there. Here's a really crazy part, guys. I know I'm talking about a year or 2 years, all of that. You can get there in 3 months. You can get there in 6 months. I started 15 months ago. I am making more than twice what I made when I was an employee right now. I'm not even a year and a half into being an entrepreneur. It is very, very, very possible. And when you start seeing that volume of money, you have to change your mindset. You have to upgrade the way you approach money, or else you're just the same person with more stuff, right? With the same bank balance. Your house is just going to be cooler. But I think we all understand the goal is to not be cooler in our current house, but to have a cooler house, right? And that's the long-term play. So with that said, I think final thoughts on this are automate your savings, automate your investing, automate your retirement, right? Do you have a Roth IRA? Do you have a SEP IRA? Do you have a solo 401k? You should be contributing to those on a regular basis, because you're going to retire one day and you don't want to turn around and go, wow, I lived a great 40 years. I don't have any money to retire. Whatever amount you think you need to retire, double it, and that's actually what it's going to cost because of inflation and cost of living. So back in the day, if you had $2 million, you could live a great retirement life for 20 years. Now, same 20 years will cost you $6 million, right? To live a comfortable retirement life. By the time we all retire, guys, that's going to be $10 million. So we need to start planning and investing. When you understand what that number is, that behemoth, you'll understand that I got to start yesterday, right? I've been obsessed with retiring since I got into college. And people thought I was so weird. And then they all started investing a few years into their W-2 jobs, my friends, and they go, oh, I did the math, Ramu, and I realized that you have a head advantage, even though I might have only put a few $1,000s in over my 4 years of college. That compounding is going to make all the difference. If you want more information on the retirement side of stuff, that's a whole nother seminar that we can talk about. But retirement and savings, automating these things are very, very important. That mindset is essential. To, in our last few minutes, I just want to say that, of course, I strongly recommend you guys to seek professional advice on this. These are just my opinions and life experiences. What questions do you guys have for me? Let me just text my next meeting that I'm going to be a few minutes late.
I have no questions, sir.
I don't have any either. A lot of good information.
No, thank you, sir.
Okay. If you don't have any questions, I'd like everybody to go in a circle and share your biggest takeaway. And if your neighbor said it, give me your second biggest takeaway. Miss Judy, would you like to start?
Yes, I love this teaching. I think you did an awesome job, and it's much needed. I mean, it just was a refresher course. That's all. So thank you.
Thank you,
Awesome.
ma'am. Thank you, ma'am.
Thank you very much for sharing.
Thank you. Mr. Peters?
Being aware of everything, being more aware of numbers and what's coming and going.
All right. I love it.
Thank you.
Thank you, sir. Mr. McGee?
Just hearing it all and just realizing that I need to automate more. I don't know why I don't do it in personal life.
Ooh, I love that. That's going to make all the difference, sir. Love it.
Yeah.
Mr. Barnes?
Even more strategic planning because you never know. And I've been down this medical thing and things happen. So for me, is putting aside for that as well.
The emergency savings side about you just never know, right?
It's huge.
Yes, sir. And I completely understand that because, as you guys know, with everything that happened with my dad and his heart surgery a couple of months ago, he needed a triple bypass and the guy went running every 3 days for years. He eats super healthy food. Like we would have never guessed it, right?
Yeah.
It's always if you had any other ailment, it would have been easier for us to digest. But it was just like, how does that guy get heart disease? Like it doesn't make any sense. So randomness will always occur, right, in your life, which has got to be financially prepared for that. Is Mr. Miles Dyson still with us?
No, sir.
He took off.
No? Okay. Mr. Tager?
Yeah, like I said before, finances is something I never learned. So this is so much information right now. I'm that's why I keep staring off because I'm trying to process everything you're saying. It's a lot. And I wrote down almost everything you said, and now I have to go back and just I have to reread it because yes, I heard everything you said. Yes, I processed it, but a lot of it is still over my head. And I have
Amen.
to process it, reread it, relook at it to understand it completely. Like a lot of things jump out at me. Don't get me wrong that I can implement now, but some is like,
Yeah.
Oh, I hear you guys. For me to be able to make this presentation in 90 minutes, that took me years of digesting and implementation for me to understand and know. This stuff is simple, but it's not easy.
Yes, sir.
Right? And so that's so absolutely I hear what you're saying, and the fact that I hear your commitment to going over this again makes me very happy. And I just want to reiterate that I am here for your questions, your personal questions, your personal situation. If you want to call me and tell me, hey, this is how my LLC is structured, these are my partners, this is what XYZ question, I'm happy to share whatever limited knowledge I do know with you. Very happy to always share, guys. You have my cell number. Do reach out. And Mr. Wano, after Mr. Wano, we'll go to Mrs. Peters and then we'll wrap up. Mr. Wano.
To understand that it's not going to happen and not going to be fixed overnight. But also to know that I'm on the right track, like me and you discussed. Miss Cindy was doing the little cubes thing. She has that little special bank account and everything like that. I had actually just opened mine yesterday.
Nice.
So I can start putting money where it needs to be and not overspending in those areas. I'm excited for the future, and I still have a lot of questions, which I will definitely reach out. But
Right.
we can
take it offline.
I don't know if you got all my good news earlier. Like my son's going to start taking over the business, so my other business. So to know a lot of this stuff is going to help out a lot.
That's very exciting. That is very exciting. Awesome. Mrs. Peters?
Well, I'm so glad you did this because after we had the talk Saturday, I was really looking forward to some of these classes. There's a lot of information, a lot of good information. I come from a medical background. I have like no knowledge of finances and the business part of everything. So this was very good. I wish our son had been here to listen to it, but he's off doing something else. But this would be beneficial for him as well. It's a lot of information to take in, but it's a lot of good information for us to take and move forward and kind of build on. And we have a lot of work to do.
Awesome. By the way, this is being recorded. Mr. McGee will be sharing this clip with you. Mr. McGee, if you can share it with me as well, just for my records.
It's gonna take time to download, and then I have to pull it off and edit all that stuff. Make you look good. I can
Yeah.
sound good.
Well, I don't know if you could do that. That's it is what it is. Anyways, but thank you, sir. Thank you, ma'am. I really appreciate your time. I hope you guys found this valuable.
We did. Thank you, sir.
Appreciate you. Thank you.
Outstanding.
We're here for your support and for your success. So anything Sam or I can do to serve you, count us in. Thank you all.
sir.
I hope you have a great rest of your day.
Thank you, sir.
Thank you